Hey everyone, it is just me again, sharing some more of my investment journey, the good, the bad, and mostly the ugly bits. I've talked a lot about my screw-ups, but I really want to lay out the whole story today. It is a bit of a long one, so grab a drink, settle in, and let's get into it. I promise, it is worth it for anyone who has ever thought about dipping their toes into investing. You see, for a long time, my view on money was pretty simple. I wanted more of it, fast. I grew up in a really average household, no silver spoons here. So, when I first started hearing about investing, it sounded like the golden ticket. All these promises of high returns, easy money, they just spoke to a part of me that was desperate to get ahead. Looking back, I was just a naive kid in his early 20s, completely blinded by the idea of getting rich quick. It felt like everyone else was doing it, making fortunes overnight. And I thought, why not me, right? That FOMO, fear of missing out, was a huge driver. I just jumped in headfirst, without really understanding what I was doing. It was a classic case of chasing trends, listening to every rumor, and letting my emotions run wild. And believe me, it cost me. It cost me dearly. My first big foray was into short-term trading. Everyone was talking about certain stocks, certain cryptos, things that were guaranteed to shoot up. So I piled in, thinking I was smart, thinking I had an edge. I'd buy something, it would go up a little, and I'd feel like a genius. Then just as quickly, it would plummet. Instead of cutting my losses, I'd hold on convinced it would rebound. Just a dip, I'd tell myself, it'll go back up. Spoiler alert, it usually didn't. Or if it did, I'd have already sold at the bottom in a panic. The constant buying and selling, trying to time the market, it was exhausting, and ultimately a losing game. Each trade felt like a gamble, and I was losing more than I was winning. The stress was immense. I was glued to my phone, watching every fluctuation, my mood swinging with the market's whims. It was not a healthy way to live, and it certainly wasn't a profitable one. I was literally throwing money away, chasing the next big thing, only to be left with less than I started with. Then there were the outright scams. Oh, those were particularly painful when you're looking for quick money. You become vulnerable. I fell for a few of those too, promises of incredibly high, guaranteed returns, often from sources I knew deep down were too good to be true, but the lure of easy money was just too strong. I remember one in particular, a project that claimed to use some revolutionary AI to trade for you, generating daily profits. It sounded so sophisticated, so cutting edge. I put a significant chunk of my savings into it, convinced this was the one for a little while. The numbers on the screen looked good. I saw profits accumulating, felt like I was finally winning. Then, one day, poof, the website was gone, the contact numbers disconnected, and my money, along with countless others, vanished. It was a harsh lesson about due diligence, about checking credentials, and about trusting my gut when something feels off. That feeling of being conned, of being so completely foolish, it really hits hard. It wasn't just the money, it was the blow to my confidence, the feeling of being taken advantage of. Another major problem was my complete lack of risk management. I'd hear about an investment, get excited, and pour a huge percentage of my capital into it. What is called going all in or heavy positioning. It felt like a bold move, a sign of conviction. In reality, it was just reckless. I didn't diversify. I didn't set stop losses. I didn't have an exit strategy. My entire financial well-being would often hinge on the performance of one or two speculative assets, and when those assets inevitably took a dive, my entire portfolio would crater with them. I remember one time I put almost everything I had into a single, relatively new cryptocurrency. I was convinced it was going to be the next Bitcoin. The hype was intense, and I bought into it completely. For a few days it went up. I was ecstatic. I imagined all the things I would do with my newfound wealth. Then a major market correction happened, and that coin, being highly volatile, crashed harder than anything else. I watched helplessly as my savings evaporated. That was a truly gut-wrenching experience, seeing years of hard work disappear because of one incredibly stupid decision. And then there was emotional trading. This was probably the root of many of my problems. Every market fluctuation, every piece of news, it would trigger an emotional response. I'd buy out of greed, hoping to catch the next big wave. I'd sell out of fear, panicking when prices dropped, locking in losses that might have recovered if I had just held on. I never had a clear plan, no defined entry or exit points. It was all impulse, all based on how I felt in the moment. The constant emotional roller coaster was exhausting. I'd spend sleepless nights worrying about my investments, checking my phone every few minutes. It wasn't just my money that was suffering. My mental and physical health were taking a toll too. It felt like I was always fighting against myself, my own worst enemy in the market. This cycle of hope and despair, it is something I wouldn't wish on anyone. It teaches you a lot about human psychology, both your own and the collective markets after all those heavy losses. After seeing years of hard-earned savings disappear into thin air, I finally had my wake-up call. It wasn't a sudden epiphany, but a gradual realization that what I was doing was not investing, it was gambling, and I was really bad at gambling. It hit me that I couldn't keep going down this path. I was tired of the stress, tired of the constant anxiety, and most of all, tired of losing money. That is when I decided to completely change my approach. I realized that if I really wanted to build wealth, it wasn't about getting rich quick, but about getting rich smart. It meant actually learning, understanding the fundamentals, and ditching the hope and pray strategy. So, I started from scratch. I immersed myself in books, articles, legitimate financial education. Not the get-rich-quick gurus, but established, reputable sources. I learned about long-term investing, diversification, asset allocation, and most importantly, risk management. I started to understand concepts like compounding, inflation, and the importance of a solid financial plan. It wasn't nearly as exciting as chasing meme stocks, but it was incredibly empowering. I learned about low-cost index funds, about consistent contributions, and about focusing on building wealth slowly and steadily. It felt like I was finally speaking a different language, a language of stability and common sense, rather than hype and speculation. I shifted my focus entirely. Instead of trying to beat the market, I decided to just be in the market. I moved towards more stable, low-risk investments. I started prioritizing saving, building an emergency fund, and making sure my financial foundations were rock solid. It was a complete overhaul of my mindset. The desire for instant gratification was replaced by a patient, disciplined approach. I stopped looking for the next big thing and started looking for consistency and reliability. It was a mental shift from a gambler's mentality to an investor's mentality. It was hard at first, especially unlearning all those bad habits, but it was absolutely essential for my financial recovery. My goal now isn't to be a millionaire tomorrow. It is to build a secure financial future. One step at a time, it is about preserving capital, growing it responsibly, and making sure I'm not susceptible to the kind of emotional decisions that cost me so much in the past. I'm no longer chasing the thrill of big wins, because I know that thrill often comes with the sting of even bigger losses. Now, I find satisfaction in watching my investments grow steadily, even if it is not headline-grabbing. It is about knowing I have a plan, and I'm sticking to it. And that is why I share my story. I want to help other young people, especially those in their 20s, avoid the painful mistakes I made. I don't pretend to be some financial guru. I'm just a regular guy who messed up a lot and learned from it. My experience is a cautionary tale, a blueprint of what not to do. I hope that by sharing my blunders, I can give you a shortcut past some of the financial pitfalls that tripped me up. I want to show you that a slow and steady approach, grounded in common sense and solid principles, is far more effective than chasing shadows. So for anyone just starting out, or even those who might be feeling a bit lost in the investing world, here is my advice, my bottom line thinking. First, please educate yourself. Don't just listen to strangers on the internet, me included, without doing your own research. Understand the basics. Know what you're investing in. If you don't understand it, don't put your money into it. It is that simple. There are tons of free resources out there, books, reputable websites. Start with the fundamentals. Learn about diversification, about risk and reward, about different asset classes. Don't be intimidated by the jargon. Break it down into digestible pieces. Second, ditch the get-rich, quick mentality. It is a trap, pure and simple. Wealth building is a marathon, not a sprint. Focus on consistent saving and investing over the long term. Compounding is your best friend, and it needs time to work its magic. Resist the urge to chase the latest hot stock or crypto. Most of those end up burning people. Think about building a strong financial foundation, not winning the lottery. Patience is a virtue in investing, perhaps the most important one. Third, manage your risk. Never, ever put all your eggs in one basket. Diversify your investments across different assets, industries, and geographies. Don't invest more than you can afford to lose. Set clear limits for yourself. Understand that losses are a part of investing, but catastrophic losses often come from poor risk management. Have a clear investment plan and stick to it, especially when emotions are running high. This means having an emergency fund, investing in a way that aligns with your risk tolerance, and regularly reviewing your portfolio. Fourth, beware of scams. If something sounds too good to be true, it almost certainly is. No legitimate investment offers guaranteed high returns with no risk. Be skeptical. Do your due diligence on any platform or person asking for your money. Check reviews. Look for regulatory compliance, and don't be pressured into making quick decisions. Scammers thrive on urgency and secrecy. Take your time, ask questions, and if you have any doubts, walk away. It is always better to miss out on a potential gain than to lose everything to a fraud. Finally, and this is a big one, understand your own emotions. Investing can be a deeply emotional endeavor. Fear and greed are powerful forces that can lead to terrible decisions. Develop a disciplined approach. Stick to your plan, even when the market is volatile. Don't let daily fluctuations dictate your actions. It is about having a long-term perspective. Learn to recognize when your emotions are trying to take over and step back. Sometimes, the best thing you can do is nothing at all. This emotional control, or lack thereof, was one of my biggest downfalls, and learning to manage it has been one of my most valuable lessons. I truly believe that anyone can build financial security regardless of their starting point. It just requires the right mindset, the right knowledge, and a whole lot of discipline. My hope is that my journey, with all its bumps and bruises, can serve as a guide for you. It is about empowering yourselves with knowledge, making informed choices, and avoiding the kind of mistakes that can set you back years. So, that is a pretty comprehensive look at my screw-ups and what I learned from them. It is not a success story in the traditional sense, but it is a story of learning, resilience, and ultimately finding a better path. I'm still on this journey, still learning, still growing, but I feel much more grounded and confident in my financial decisions. Now, I'm here to share the reality, not the fantasy. I really appreciate you sticking with me through this long story. It is important to me that these experiences aren't just mine, but become lessons for others. Your support means a lot, and I'm always here to share more, answer your questions, and just talk about the realities of building financial health. Remember, your financial future is in your hands, and learning from others' mistakes is a powerful way to protect it. Thanks for listening, and I'll catch you in the next one. Take care.